What up, YouTube? I'm back. I got one more video for you, and then that's going to end this trading week. So today is the 13th, 6/13. We just had a whole bunch of war stuff going on last night, and uh, I made some money this morning. I made a decent amount. So we're gonna get right into this video. All right, so we're gonna start off with the 4 hour dollar. It's the dollar time frame on the 4 hour. So the first, this is the first thing during the 4 hour time frame. The 3 o'clock candle broke bearish 4 hour market structure to the upside. So I got the crosshair on the 4 hour, on the 3 o'clock candle. And right here is the swing high that it broke on the 4 hour. And that's important because that's like real important market structures. The higher the time frame, the more important the market structure is. So once again, from my last video I did, these were important monthly prices, and we basically traded below those. And to me, that was already a sign right there to we supposed to be seeing the futures going up. So now we here on the 1 hour time frame. After prices deliver below that monthly swing low, right? Prices had a failed swing low and then started to deliver upward. So once they delivered past those prices that I showed you and broke the 4 hour bearish market structure, this became bullish right here. So I was looking for the future markets to start going down somehow. That was the first like narrative for the future markets at this price right here. You're supposed to start seeing lower futures. Overnight wartime things delivered prices below old Asian low that were swept by NQ earlier this week, but not swept by the ES at the same time. So these are the prices all the way over here to your left. I got them marked out. This candle right here is the candle that didn't deliver prices below the Asian session lows, but on the NQ they did. But fast forward to now, June the 12th, which was yesterday, but this is the beginning of the session, beginning of the new trading day. During Asia, this happened during the Asian session. Like the market just crashed and collapsed when all that war stuff started going on. So the same thing happened for the NQ. When all that war stuff started happening yesterday, the session break is 6 o'clock. Once all that war stuff started happening, and I think I think Israel bombed Iran. Once that happened, the market crashed and traded below the Asian session prices also. But if you look over here to your left, the Asian session low prices that I was referring to in the ES were right here. And Q already traded below those prices, so we just went a little bit deeper past those prices for this go around. So now we back here on the dollar. So after the dollar traded above those prices that I showed you, right, in my first couple slides, the market pulled back, and then I was expecting the market to go higher to continue the bullish market structure. But the moment I seen prices start to turn around right here at 9:45, prices broke this low right here. So basically prices started doing a downtrend basically. So it went from a uptrend, low, high, higher low, higher high, higher low, and then it breached this higher low and delivered prices below that low. So now the sentiment changed again for the future markets and more of a intraday time frame. because when prices breached these prices up here, this was like on a bigger time frame. This is the 4 hour, but this is for kind of intraday. So it was supposed to continue the bullish market structure, but it didn't, and it doing started delivering price lower. So that means that I was definitely expecting the futures to go up. All right, so this is what I was looking at on the ES on the 1 minute time frame. Um, yeah, the prices started delivering lower, and immediately when I was expecting the prices to be delivering higher because of the sentiment change over there on the dollar, I looked at any run lower as a run on stops, and I was looking at it as there was gonna be accumulating new long orders, the new position to go long. So that's automatically what I started looking at when I seen this run started to happen, and this was at this price, it was 914. You jump over to the NQ real quick. The NQ was doing something relatively the same at 914, give or take. This was the run on stops that NQ was doing. If you go to right here, this is 914. Where I got the crosshairs on that candle. So everything before that time right here, this is all being a run on stops underneath these stops over here. So these stops over here were being ran to accumulate new long positions, and then the market just jumped up. So that's how I got in the market. Go back to the ES. If we replay the candles, because I got in at 91, I remember 91.75. So where's 91.75? 91.75. I got in my, I got, entered my positions at 91.75, and then I think 90 on the dot. So 59.91.75 was my first one, and then my second one was 59.90 and some change. So it might have been 90.25 or 90.50. I just know I got in 90 and 91. So I took a little bit of heat on the position, but I ended up seeing the market move. And I had $12 on my stop. So from 91 right here to right here was not even $10. So from 91 to 81, which would have been right here, would have been $10 to $12. I didn't see $10 of drawdown. So then I ended up getting in again at 90 right here, right when this candle pulled back. And I took it up to the opening, the weekly open. And I closed my position right there. Before this candle pulled back, I had already closed it out. So yeah, that's it.